Good morning and welcome to the next program of the Nutter webinar series, Moving Forward to the New Normal. I'm Paul Ayoub. I'll be moderating this program along with my partner, Melissa McMorrow. We're members of the Executive Committee of Nutter and co-chairs of the firm's COVID-19 task force. So today we'll be focusing on the most recent updates to the Payroll Protection Program, and we know there have been many. And the goal today is to provide you with practical insights on how you and your business can navigate the program. Now, there's no better way to understand the program than to speak with the people who are implementing it. So we are pleased to have two leaders from the Massachusetts District of the SBA with us this morning. We'll do more formal introductions when they speak. So let me simply welcome Deputy Director Peter Kontakos and Assistant Deputy Director Eli Spayu this morning. Director Bob Nelson had planned to join us, but very late yesterday had an unexpected circumstance arise needing his attention. So will not be able to be with us today. We're also joined by Melinda Ailes, the Senior Business Advisor at the Small Business Development Center, and our partner, Josh French at Nutter, who has been dedicating substantial parts of his days and nights advising businesses on the PPP. We fondly call him the P4, the Payroll Protection Program Professor. So we look forward to our discussion this morning. And one final note, we are recording this program, and that's in an effort to provide it as a resource for the community who wouldn't be able to listen today, because we are trying to provide with the SBA as much information as possible to our community about this very important program. And so with that, I will turn the program over to my partner, Melissa McMorrow.
Thank you, Paul. Welcome to all of our panelists and to all of you who are able to join us today. As Paul said, our goal with this program and all of our programs is to provide actionable, practical insight and guidance to all of you. So we are very pleased to have three panelists here with us who are at the core of implementing the Payroll Protection Program. Our first panelist is Peter Kontakos. Peter has been the Deputy District Director of the SBA in Massachusetts since last September, joining the SBA from the Department of Transportation. Before coming to work for the federal government, Peter also had experience in the private sector at Eastern Bank, where he supported a wide range of consumer and commercial lending activities. As Deputy Director, he's had his hands full guiding the implementation of the PPP in Massachusetts, and we're so pleased he could be with us today to share his insights with all of you, along with his colleague Eli Spayu, who will be speaking after Peter. Peter, we want to thank you directly and all of your team at the SBA for all you are doing on behalf of the community and our regional economy. We know you have all been working around the clock and truly appreciate it. We think it's very important to acknowledge all of these efforts at this time and your commitment to our community, and especially to small businesses. So thank you and welcome.
Thank you very much, Paul and Melissa. You guys can hear me okay, right?
Yes.
Perfect. So I just want to, really thank the Nutter organization for this opportunity to have us on this call today. You guys have been doing a lot of great work and activity with COVID-19 relief efforts, and I just can't say enough about the work you guys have been doing as well. So again, thank you for having us. Thank you for allowing us to participate today and to share some very relevant and pertinent information with your participants. So I'm going to kick this off by just giving a brief overview of the Paycheck Protection Program, PPP, kind of where we were, where we are, where we're going. Eli Spayu is then going to really go into the nuts and bolts of PPP. And then Melinda from our Small Business Development Center is going to talk about her organization and the support that she provides her clients. So we could go to the next slide, please. So just to give a very, very quick timeline of the Paycheck Protection Program, PPP. The first round of funding for PPP was provided under the CARES Act at the end of March, beginning of April. And we went through that money very quickly within I would say approximate 2-week period. Then there were additional funds that were provided for PPP, and we're still trying to distribute those funds. They go until the end of June. So basically, if an organization is looking to get PPP funding, they have till the end of the month, and they have to, go to their lending institution, submit the application, and the loan number has to be received by the end of the month in order for that loan to be able to count. So again, we'll get into more of those specifics later on, but there is about a week, little under a week left for PPP funding. So there's about $130 billion that remains approximately for PPP funding. So what I want to do now is just to go through some of the statistics and data that we have, just at a very high level, very quickly. So on this slide, you'll see that there's been over 500 or approximately $515 billion total, over 4 million loans, and over 5,000 lenders nationwide that have contributed to this PPP program. And the majority of the loans have been for smaller dollar amounts, and we're going to see that data in the next slides coming up. So if we could forward to the next slide, please. So again, this is national PPP loan data, and this is for both phases 1 and 2. Phase 1 being that first 2-week tranche, and then the phase 2, the money that still remains that we talked about. So really, if we just look at that first line, $50,000 and under, that accounts for approximately 66% of the count of the loans. And again, this is broken down by loan size and then loan counts. So really the overall average loan size, as this slide indicates, is about $110,000 as of the end of last week. If we go on to the next slide, please. If we look at the data at a regional level, these are the 6 New England states, Region 1 within the SBA. And, we're looking at the data here in Massachusetts, the state we reside in and work in, really is carrying about half of New England, almost half when it comes to the number of loans and the dollar amount. And then, you see the rest of the states here. But again, just a lot of activity total, about almost close to $40 billion. And, again, the amount of funding remaining remains close to $130 billion. If we go to the next slide, please. So this slide is referring to our SBA Economic Injury Disaster Loan Program. I believe Melinda will talk more about the EIDL program in her remarks, but just real quickly, because I know we're focused on PPP today, but real quickly, the EIDL program is an SBA program managed through our Office of Disaster Assistance. And this program actually came out first before PPP. It was around during PPP, then there was a pause where only agricultural firms were able to apply for this. And most recently, it's been reopened again to everybody who would like to apply. The EIDL program is a loan program. The first $10,000 is forgivable up to $10,000. It's $1,000 per employee. The basic terms are 30 years, fixed term, 3.75% fixed. And it has some similar purposes than, like the PPP does with working capital and payroll and whatnot. But if you have a PPP and an EIDL, they cannot be used for the same purpose. The EIDL, technically you can get up to $2 million for the EIDL loan. We've been hearing from a lot of small businesses that there has been a cap of $150,000, but there's nothing official from the SBA on that. But Again, there's been a lot of money, a lot of funding that's been distributed through this EIDL program. To be eligible, you have to be able to attest to the fact that you have suffered an economic injury due to the COVID-19 disaster. So if we can go to the next slide, please. Again, these are the numbers in New England with regards to the EIDL program. So again, a lot of EIDL loans that have been made, dollar amounts are really high, just like the PPP program. And again, Massachusetts, accounts for almost half of this. So that really concludes my remarks in terms of, high-level overview of PPP, again, where we've been, where we are, and where we're going. I'm going to turn it over to Eli now, who's really going to delve into a lot of the specifics with regards to PPP, and I think what really a lot of people want to hear today. So, again, thank you for this opportunity, and Eli, all yours.
All righty. Well, good morning again, everyone. Thanks for joining us. Paul, Melissa, Josh, thank you very much for the opportunity, to share some brief remarks here about the program and provide folks with some detailed information on regards to the forgiveness part. But Peter did a good job going over the timeline. Everybody knows, what's happened. This slide over here has got a nice picture of me, so it makes it official. It verifies it is me speaking. In addition to that, I did want to share quickly and just want to stress a couple of points here. So first and foremost, less than a week, to apply for a PPP loan. If you have not taken advantage of it already, make sure you do. Don't wait till the last minute, because your lender is going to require time to process the loan. The 30th of June is the last day your lender can process the loan. It's not the last day you can walk into a lender and request a loan. So keep that in mind. The other thing that Peter also mentioned is the economic injury disaster loan. It's by far one of the best options out there. Glad it was reopened on the 15th of June, so folks can still take advantage of it. I hear from small businesses that my landlord's not working with me, that I still owe rent that's past due and this and that. Ask your landlords to apply for an EIDL loan. An EIDL loan is available to a landlord, to a passive business, unlike the PPP loan. So make sure your landlords are aware of it. If they have not taken advantage of the program, they should, okay? Because that helps you and that helps them, okay? So, the numbers speak for themselves. I think, another program I do want to point out here that everybody perhaps may be familiar with is our debt relief program. So for existing SBA loans, the agency is making 6 months worth of principal and interest payments, okay? So if you have an existing 7A 504 loan with the SBA through your bank, we are making those payments for you, okay, for 6 months. In addition, if you think you're going to need capital, we're going to continue to make 6 months worth of payments for loans that are issued and originated before September 27th, 7A and 504. So again, this is the time to do it. For the most part, on the 7A side, again, if it's approved on the 27th, that qualifies automatically for 6 months worth of payments. On the 504 side, it's a little different, because 504s are debentures that are sold in the secondary market. The very last day that loan can be submitted to the SBA through our district council is August 12th. So not a whole lot of time on the 504. So if you think that you're eligible to, to apply for and qualify for a real estate, loan through the 504 loan program, machinery, equipment, with a useful life of greater than 10 years, the 504 is the answer. And we're talking 25-year repayments, rates below 3%. It doesn't get any better. So we can move on to the next slide. I know people are waiting for this information. So, but I just quickly wanted to go over, what's out there for everybody to be on the same page. So the Flexibility Act, which was signed into law on the 5th of June, is the latest and greatest we've got on the Paycheck Protection Loan Program. In addition, of course, to the 20 interim final rules that everybody loves, those 48 plus questions we've got on the FAQs, and the endless amount of information that we have provided. So, but briefly, one of the major benefits afforded to small businesses through the Flexibility Act is the extension of the covered period. So we're talking everyone, whether your loan was approved before the 5th of June or after the 5th of June. You have the option to choose either the 8-week covered period track or the 24-week covered period track. Okay? So that's across the board. If that's a question in your mind, you have the opportunity to choose the 24-week track. That's the covered period. Now, keep in mind that is the date, that timeline starts from the date of the disbursement. No questions asked there, and there's no flexibility around that. The other major benefit here is for new loans approved on or after June 5th. You automatically get a 5-year term instead of a 2-year term. Now, if you already have a loan that was approved before the 5th, you're going to ask, well, how about me? Why am I stuck in the 2-year term? If you think you're going to need more time to repay this loan, and if there's going to be a part that's not forgiven, okay, that's when you really have to worry about it, the repayment part of it. Then you can reach out to your lender, bank, credit union, whoever, and you can request an extension of the term. It is, at the discretion of the lender to approve it, to say yay or nay, but you have the option to approach them, and they have the ability to extend the term if they so choose. Okay, so keep that in mind.
Eli, real quick, Eli, just
Sure.
for curiosity, have you been hearing anything from lenders about their willingness to do that for people who have pre-June 5 loans?
A good number of them, are willing to work with borrowers, on a case-by-case basis. I don't know of a single one who's offering 5 years for everyone. But if there is the need, everyone is open to that idea. Everyone I've spoken to. So we've got 5,500 lenders in the program. I cannot speak for all of them.
Right. Fair enough.
So another major benefit here is that the payroll costs, which drive the amount of the forgiveness, as you're going to see on the next few slides, was reduced. The requirement was reduced from 75% down to 60%. And that's across the board. So whether your loan was approved before the 5th of June or after. So now the 60% is not a cliff, okay? So what that means is that the 60%, let's just take a scenario here, because this is a question that comes about often. If let's say you had a PPP loan for $100,000 and you had to spend $60,000 of it, or 60%, in payroll costs, and at the end of the 24-week window, you've only spent $54,000 in payroll. That doesn't mean you're not going to get any forgiveness, but your forgiveness is subject to the 60% requirement on payroll. So you take the $54,000 divided by 60%. That gives you $90,000 in total forgiveness. So 54 was spent in payroll. The additional $36,000 can be spent on covered expenses, mortgage interest, leases and rent payments, and utilities and transportation in service, right, as of February 15th of 2020. Okay, so keep that in mind, that February 25th is an important deadline. So another thing, to remember is the extension of the safe harbor date from June 30th of 2020 to December 31st of 2020. And we'll talk more about that. So on this next slide, quickly just wanted to share with everyone that, and we did have some links here, live links, but all our information is on our website. So another, well, I should say the latest and greatest we've got on forgiveness is the Form 3508-EZ, okay? So the Form 3508 really requires a lot of hand-holding. It's going to require you to work with your accountant. It's going to require you to work with, an attorney. Our resource partners are a great, option as well. And Melinda is going to talk about that in a second. But on the easy forgiveness application, I don't think a lot of folks are going to require much help. It's fairly straightforward, pretty simple. It's a one-page application plus another page with certifications, and requires no worksheets, no additional calculations, okay? A lot of certifications though, so don't forget. Same thing with the 3508, the standard form for those who don't qualify for the easy version of the forgiveness application. definitely that's going to require a little more tedious calculations and a lot more, it's a little more involved, I would say. So we can move on to the next slide because we can talk about the easy forgiveness application. We feel that the majority of our PPP recipients are going to fall under the easy option. So you saw, as Peter went over the numbers, loans under $100,000 account for 80% of the total approvals on the PPP. Okay, so unlike what we hear on the news, the small businesses are getting the assistance. 80% of those units is going to the smaller, smaller businesses. So if you are a self-employed individual, independent contractor, sole proprietor with no employees, then 3508 easy form is for you, right? So no questions asked. Now, in addition, what the Flexibility Act allowed SBA and the Treasury to do is provide the same opportunity for businesses that are any other type of business entity, right? But they did not reduce the annual salary or hourly wages of any employee more than 25%. So I know that's a mouthful, but the way you want to think about it, salaries, if they're 75% of what they were or greater, then you meet that one requirement. But it's a two-pronged approach. So this is not a one, pill fits all, right? So it has to, in addition to that, the business, right, the borrower did not reduce the number of employees, so that's the full-time equivalents. So maintaining the salary and wage levels is one criteria. The second one is maintaining the FTEs, okay? Or not being able to rehire the same people or similarly qualified and skilled individuals. So that's one, qualifying criteria. The second one is, again, the small business did not reduce the annual salary or hourly wages by more than 25%, okay, during the covered period, or they were unable to operate at the same business activity level as they were prior to the pandemic, and that's due to the stay-at-home orders or any other Board of Health regulations and what have you not. So anything state or federal mandates. Okay, so if a small business can certify to those two criteria, then they qualify for the 3508 easy application. Okay, so let's move on to the next slide. We have a lot more information here. So, in broad strokes here, the process. Okay, so we've got a borrower completing the form 3508 or 3508 easy, whichever is appropriate. Okay, submitting that to the lender. Nothing comes to the SBA directly from the borrowers. We just don't have the manpower to do it all. So that's why we are very grateful to the lending community that really stood up this program in a matter of hours, made it all possible for all small businesses out there. So the lender is going to take their time, not necessarily because they have to, right? They have a large volume. So for some of our lenders, PPP activity accounts for 3-4 years of their total commercial lending activity. So we have allowed our lenders 60 days from date that you submit the loan forgiveness application to the date they can send it to us. Doesn't mean they're going to take 60 days, okay? But they have up to 60 days. And then once they make a determination internally, given the documentation provided, okay, they'll send it to us, and then we in turn send it to the Treasury. They have the money. So the Treasury, again, because of the added volume and the millions of applications that probably are going to hit their door, they have up to 90 days, okay, to come back to the lender with with a decision. So this is very important. I want to make a point here, because one of the things we didn't talk about is the extension of the deferment period. So your deferment period on the PPP loans went from a 6-month deferment to either a 12 month deferment if you choose the 8-week track of the covered period, or a 16-month deferment period if you were to choose the 24-week track. Okay, so 24 weeks is almost six months. You got 10 months on top of that. 8 weeks is almost 2 months. Then you got 10 months on top of that. However, your deferment can continue as long as the date that the lender receives a decision from the SBA and Treasury on the loan forgiveness application. So you could add those 90 days that it will take the SBA and Treasury to make the payment, and the 60 days that it will take the lender to submit to us. So you can add an additional 5 months. So if you really have a 2-year term on your PPP and it's going to take 21 months, that's how the math works, right? 16 plus 5 months. If it's going to take 21 months for a decision to be made, you don't have to make a payment on these loans. Now, keep in mind, many of you don't want this forgiveness to be hanging over your head, for 21 months. No one does. So again, best advice is to submit the loan forgiveness when you feel that you have met all qualifying criteria. Okay. So again, if you did receive an EIDL advance, which is a number that Peter went over, we have $255 million in advances here in Massachusetts alone. Okay. So if you received an EIDL advance, that's a grant. It's part of the CARES Act. It represents a duplication of benefits with the loan forgiveness. So the grant, being the lesser of the two for the most part, is going to be deducted from the loan forgiveness amount. Anything that's not forgiven, in the example I gave earlier, where $90,000 is forgiven because you had $54,000 in payroll cost instead of 60. So 90,000 minus 100, which was the loan amount, that $10,000 is going to be the 1% loan, which has no prepayment penalties. Okay, you can pay it at any time, or you can pay it over time for the remaining term of your loan, your PPP loan. It's at 1%, and it does accrue interest. It accrues interest from the date of disbursement. So we can move on to the next slide, please. All righty, so payroll costs. This next slide is pretty self-explanatory here. One thing that I do want to point out is the payroll costs are either paid or incurred during the covered period. So you can choose for administrative conveniences the alternative covered period. And again, the rest of it, pretty self-explanatory. We'll move on to the non-payroll costs. So on this next slide, again, one of the things I do want to point out, again, is all obligations must have been in service on or prior to 2/15 of 2020 in order for those to be covered expenses. Okay. The other thing to keep in mind here is no prepayments are allowed. So we're looking, you can include past payments, but you cannot include, prepayments. So let's say if your covered period is April 15th to October 15th, you can include the rent for April 1st, but not the rent for November 1st. Okay. So again, it cannot exceed 40% of the forgiveness amount, and it has to be one of those qualifying criteria. So on the next slide, please. Safe harbors. Okay, so safe harbors, there's 2 of them. So one is on maintaining full-time equivalents. The other one is in maintaining salaries and wages. Okay, so you have a reference period. You have an option to choose between those 3 reference periods. So if you're a seasonal business, you can choose any 12 consecutive period between May 1st of 19 through September 15th of 19, and so on and so forth. The flexibility allowed here on maintaining, full-time equivalents is how you count part-timers. So you can count for part-timers. A 10-hour part-timer could be a half a full-timer, or you can aggregate 4 10-hour part-timers to be 1 full-time equivalent. If you've got 4 10-hour part-timers, you can use the half employee option, and you get 2 FTEs instead. So keep that in mind. Yes,
I'm just going to call an audible here because we have tons of questions coming in. Maybe if you could just hit a couple of highlights and we could go to Melinda, it would be great, because the questions coming in are fast and furious, and I know we only have a half hour, so thank you.
Exactly. All right, so let's move on to the very next slide real quick. So this is, again, for the most part, this is pretty self-explanatory. This slide, there's a lot of good information here. It's a good summary of the safe harbor on maintaining salaries and wages. The one thing to keep in mind, whereas the reduction for full-time equivalents is a percentage, a proportional percentage reduction, prorated, this one has to be a calculation on a per employee basis. Okay, and it is a dollar per dollar reduction. And again, the comparison is the covered period with Q1 of 2020. So next slide, please. We're almost there. Documentation, again, look at the instructions for Form 3508EZ and 3508. Very detailed, I think very thorough. It covers everything. There are documents you don't need to provide to the lender, but you must retain in your file for 6 years. All right, so next one, please. And I believe that may be the last, or the one before last. How's that? So again, this is a summary of how you do it. If those reductions apply, whether by FTEs or by reduction in salaries and wages by more than 25%, you have to apply that. You have to calculate whether you made the 60% payroll cost, requirement. And on the next slide, real quick, that's the last one for sure. There you go. So you have to keep in mind that your forgiveness amount is capped by the loan amount, the original loan amount. So if you can spend all of it, 100% of it on payroll. You divide that 100% figure by 60%, you're going to get a larger amount. That doesn't mean it's going to be forgiven. Your upper cap is the original loan amount, right? So a quick, a reminder here about owner compensation. This is something that the loan forgiveness and the IFRs issued after May 22nd have spoken of. Prior to that, we didn't hear much about it. But again, it's there was some originally owner compensation was capped at 8 weeks of the 2019 net income. So now folks can have the full 2.5 months of forgiveness. Okay, and given the longer 24-week track, that's going to make it possible. So covered expenses again, either claimed or entitled to have been claimed on the 2019 taxes. And that's it for me. Eli out. Ask me any questions one at a time.
Eli,
I think.
Oh, go ahead.
All I wanted to say was, there's a lot of math here, but if you break it all down, it's not the end of the world. And there are great people like Melinda who are resources to help small businesses as they work through these issues.
And that's a good way to bring you in, Melinda. But Josh, maybe you want to just, I think if with the permission of the SBA, we'll post all these slides on our website. And Josh, you also have a PPP calculator, right? That is on our.
We have. I was being a little modest. We also have a calculator out there that, to Paul's point from earlier, I've spent probably more time on it than I would ever have imagined if you had asked me what I was going to be doing in April and May. But everybody's keeping me on my toes, and it is, to be a little less modest, I think it is something that is a good educational tool and that will help guide you as you make your decisions and think about how this works. So more than happy to answer any questions anyone has offline about how that spreadsheet works.
Yeah, and so we'll go to you, Melinda, but just one other thing is that the calculator actually apparently has gone viral. So we're getting questions and responses from all over the country, which has been very cool. And just one of the things we've tried to do, and Peter, you alluded to this, and that is just be a conduit of information that's practical and helpful to the community. And so, Melinda, we're so pleased that you'd be with us this morning. We wanted to include you in this program because of your experience in management advisory services to small and mid-sized businesses from a wide range of industries. For those who don't know, Melinda recently retired after serving as the regional director of the Massachusetts Small Business Development Center and has continued to serve as an advisor for the MSBDC's clients in the Southeast region. So like Peter and Eli, Melinda has also had experience working in many local banks and regional banks and responsible for commercial lending, small business lending, asset-based lending, strategic planning. So it's really been on the ground for years, and we want to bring that practical aspect as well. So we look forward to hearing your thoughts, Melinda. Just one note, so we're at about 7 past. If we could open up for questions before the.
I'll be real quick, because I know you want to get to the questions.
Thank you very much.
Okay. Yep, my pleasure. Thanks for letting us be here today. And the reason we're here is we're an organization that can help you answer the questions that you've got, particularly on the EIDL and the PPP. We're an organization that provides high quality, free, confidential, one-on-one, in-depth advice to small businesses. We work with businesses from every industry of almost any size up until about 500 employees. We work with companies that are different stages, anywhere from startup to several hundred years old. And we do that through full-time qualified business advisors that have both entrepreneurial and industry experience. And one of the things that makes us special is we have partnerships with economic development organizations, with chambers of commerce, with universities. So we provide resources that are pretty vast. And one of the things that's happened with us is we often get termed connectors rather than advisors. So we often know when someone calls us asking for advice, where they can go to get their answer. And so specifically, next slide, our areas of assistance include business, strategic, disaster planning. For the last, since March 10th, we've been dealing almost exclusively with clients who are looking for assistance on the EIDL and PPP loans. We've been answering questions. We've been helping them fill out the applications. We've been talking about, what qualifies, what doesn't qualify. What if I do this? What if I do that? And helping them work through that. And in general, our other areas of assistance include cash flow analysis, cash flow management, startup feasibility analysis, financing and capital access. Probably about 50% of our clients are looking for some kind of financing, be it investment or loans. And right now it's 100% when we're talking about the EIDL and the PPP. Our services also include international trade, compliance, finding distributors and reps in Asia, whatever it might be. And we also help with SBIRs and government procurement. Next slide. And I thought I would take a second and just tell you what some sample clients look like so you can see the kind of things that we do. First sample client, a 40-employee manufacturing firm. We have helped them create a strategic plan, find a bank that can provide for their cash management needs, international sales support, compliance, and found a distributor network. We help the hairdresser start the business in her home and get financing to do that. We work with high-tech firms. We've helped them get SBIRs and bank financing and create business plans and marketing plans. And the others, the same kinds of things: cash management, financing, expansion, acquisition. With the clients that we've been helping with the PPP and EIDL loans, for example, we worked with a 12-employee daycare center, and we helped them deal with their landlord, as someone mentioned earlier, how to deal with their vendors and how to manage their cash better. We've helped them successfully get EIDL and PPP loans. With a 2-employee dry cleaner, we help them calculate it, we help them get a PPP loan, and we help them successfully appeal a denial of an EIDL loan, because we are finding more and more EIDL loans are being denied. We're finding the reasons are often mistakes on the application. And so we're helping them go through that process. With a 150 regional restaurant chain, we helped educate all their stores and did webinars particularly for them on how they could access the funds and what they could do. I think that gives a general idea. You asked me for what were some tips, Paul. I think you asked me yesterday for things that we are seeing as best practices. And the first one is to take the PPP funds and the EIDL funds and separate them or segregate them into separate checking accounts. it's going to make their applications for forgiveness significantly easier. With EIDL, there's no application for forgiveness, but there is documentation that's required to be kept that you use the money for the correct purposes of the loan. So keeping it in a separate checking account helps, and document everything. It's a pain in the neck, but you want to be clear. So if ever there's a question when it comes to forgiveness or comes to whether you use the loans properly, it's not going to be difficult for you. So, start building a file, whatever it might be, that you keep track of everything. The next tip is continue to marshal cash. Cash is king. And we actually don't know what's going to happen next. We don't know what's going to happen with our economy. We don't know how we're going to bounce back. We don't know when or if on a second wave of virus. So continue to be thinking about how you can retain the most cash that you can, which is negotiating with vendors, including landlords, looking at your financing, make sure it's in place. Also, plan for recovery now while you're simultaneously planning for an extended downturn. Use this time to actually be thinking about when and if you should pivot, and think about other ways to ensure the sustainability of your business. And the last tip is reach out and ask questions. There's the SBA, there's the SBDC, there's your lawyer, Nutter's been terrific, CPA, and banker. The bankers are going, you go ahead to the next one, that's fine. Just want to say, if you want to reach us, we're available. You've got my email here off the slide. And the way we work is you just go online and request to talk to us. There's an online counseling form, and the address is right here on the slide. And we'll get back to you. And we are talking to people often within 24 hours. We're trying to respond as quickly as we can. Sometimes 24 hours doesn't work. And it does take longer than that. But we are doing the best to talk to and help as many people as we possibly can.
Melinda, that is terrific. And the slide you had about the important things to consider, I would say this, it's critical for a small business. It's true for every business. And so I think of all that we've seen in these slides, that's a slide that people should review and think about every day. That's really very helpful. So we're going to open up for questions. We've received a lot. Melissa, why don't I let you lead off with the first question that we've received, and then we'll just go back and forth here. But thank you very much for those great presentations.
Yes, thank you, Paul, and thank you, everyone. There's a lot of information packed into to these slides, and thank you so much. So these questions, we're going to get a little bit more granular on these questions, and they are excellent. But I'll kick it off with one. What limits are there for owner compensation through PPP loans?
Peter, you want to take that, or you want me to go over it?
I'll let you take that one, Eli.
All right, so owner compensation replacement is actually calculated based on the 2019 profit. So the forgiveness amount originally was limited to 8 weeks of the 2019 net profit. So for a cap of $15,385,000. However, with the Flexibility Act, that was extended because the extended 24-week term, the full 2.5 months worth of the 2019 net profit, or $20,833, is actually going to be forgiven. So the full amount of the loan for independent contractors, for example, will end up being forgiven. But owner compensation, again, is subject to those two caps depending on the track they choose for the covered period.
And I think it's important to distinguish, and I know Eli did that in his presentation, but it's important to distinguish for employees who are non-owners, the cap for, if you use the 24-week period, is extended to 24 divided by 52 times 100,000. So 46,154.
Yep.
And why do I memorize that number? Because I've had to say it about 150 times in the last 2 weeks.
This is a common one.
Yeah, that's important to know, and should help a lot of companies who took out an early loan, who were worried about spending the loan within the 8 weeks. Now, if you've got 24 weeks and you can get forgiveness for up to $46,154 per employee, it will be very helpful for companies.
So Josh, that's a good point. And again, let me jump in and add something to that. So you have to remember that your loan forgiveness is maxed out by the approval amount, right? So
right. Yep.
I've had that question asked many times, and I had somebody say, when would I actually, if I only calculated 8 weeks for an employee, when would I use 24 weeks? So think about, what's going on, right? Your certifications, if you offered jobs back to some people and they did not take it, if you couldn't rehire similarly skilled individuals, now you could use those payrolls that you could have paid, the people that didn't come back for the one person who did come back, and use it up to the $40,000 and change. So
yep.
that's a good example where folks can make good use of the Flexibility Act.
Absolutely.
Melinda, did you want to add to that, or should we go to the next question? I saw you.
Next question.
Oh, great. Okay. So this is it's an interesting question, because we know that for some small businesses, they may just not make it, unfortunately. And so two-part question here. Can I apply for forgiveness for the PPP loan if I use the money but end up closing my business? And let me just throw out the second question, which is, what if there, and it's really two different questions, but the same category. What if there's an acquisition? So a small business, and we see this a lot, may be purchased by another business. How does that work? So closing a business, and how does it work if you're rolling up to another business, which I think we're going to see a fair amount of in the days ahead. I'll throw that out to any of the three of you, or four of you, including Professor French.
So I'll take a stab at it. As far as the current guidance that we have, it only refers to operating businesses. So you have to be an operating concern, not necessarily open, right? You could still be under stay-at-home orders, or whatever, other state or federal regulations, and apply for forgiveness. But if your business is no longer a going concern, then there's no forgiveness allowed. So that would be question number one. Right. Question number two, changes of ownership. The agency is not approving changes of ownership if debt service coverage is not sufficient, including, right, repayment on the PPP, if it's not forgiven. So the way you want to think about it, and this is, again, lenders are looking at this a whole different way, but a PPP loan is not a grant, it's a loan, and it becomes forgiven once you've met those qualifying criteria. So for the period of time that it is on the books as a loan and not forgiven yet, it should be carried on the balance sheet as an obligation of the business and calculated, for debt service coverage as part of your global, obligations. So in some instances, it doesn't meet those requirements on a debt service coverage, basis. So we know that on the 504 side, that's happening. We know it's happening on the 7A side with our service center, but different lenders are looking at it differently.
Great. Josh, did you have a question?
Well, I'll sort of piggyback off that a little bit, and then I can certainly ask another question. We're certainly seeing that my day job is in transactions, and primarily M&A transactions, and we have a number of deals within the firm where this has happened. And by and large, what the parties are likely doing is setting up some sort of escrow and having it tied to the forgiveness. But you just wanted to understand if that had been discussed, and you may not know, within the SBA as to, guidance as it relates to just the consent to that loan change. And it sounds like, Eli, you're saying it is at best on a case-by-case basis, and more likely than not, especially given everything else that you got going on. You're not going to be seeking a number of, you're not going to be giving a lot of people consents to doing this. Is that a fair assessment?
That's been the current guidance, you know, so we can only speak to what we know now, and everything's subject to change.
Yeah, yep. This has been really helpful. You know, some other questions one question that came up to me yesterday that I hadn't really thought about, and I hadn't thought about until the flexibility, I hadn't thought it would even be a situation until the Flexibility Act occurred. But in the circumstance where you have a company that has a large amount of benefits that they pay, that's of course not subject to the cap, and now they can take advantage of the 24-week period. We know that forgiveness is capped at the loan amount. You can't get more forgiveness than your loan. But let's say that during that 24-week period, their spend on payroll expenses, inclusive of the benefits, exceeds the amount of the loan. For purposes of doing the application, can you put all of that into the calculation and then do the reductions as it comes out? And as a result of those reductions, you may still have 100% forgiveness because you spent so much more than the amount of your loan. How does that scenario play itself out?
Yeah, so if you, the last slide, I believe, right, the last slide of the presentation, of my part of the presentation before the questions, talks about, you know, you take the payroll costs, right, after you apply the deductions, right, and you divide it by 60%.
Right.
So that would be the maximum, right, loan forgiveness, subject to the cap being the loan amount itself. So yes, that would work.
Okay. Oh, that's great. Yeah. As I said, it hadn't even occurred to me that could be a scenario, especially when it was 8 weeks. But with 24 weeks, I can imagine there are borrowers who could fit in that scenario and using other non-PPP funds to pay the permitted expenses. Okay, that's really helpful. I'll turn it to Melissa.
Thank you. I just had a general question for Melinda. What do you see people struggling with most as they're navigating navigating the PPP process? And I think what we're seeing a theme of people working through the loan forgiveness and doing it in a real-time environment where their business is changing and the rules are evolving. So I'm just interested in what you are seeing most people dealing with.
We're seeing exactly what you described, some confusion and frankly fear that won't be forgiven, that they won't meet the criteria, that they won't do the calculations correctly, and also that the sand is going to shift under their feet again. One of the things that's happened is with the Flexibility Act, we had significant changes to the program, and we are not certain that there won't be significant changes again. And so there's not an assurance to these companies that what they know today is what's actually going to happen 6, 12, 24 weeks from now. So that's a concern.
Yeah. Well, we're glad you're out there.
Well, one of the things that we do is, you know, I think Josh mentioned how much we read. We read, we listen, we talk to Eli regularly and your colleagues regularly. I've probably been exchanging emails with Bob in the middle of the night. Hey, I got a client that looks like this. What do I do? So we are so grateful for the Massachusetts SBA because they are so responsive and so helpful. So that my last bullet on my slide was reach out to us, you know, and if we don't have the answer for you, we'll help you get that answer. That's that connector part rather than just the advisory part.
Yeah, I think this is a true real-time team effort. But Paul, is another question coming in?
Yes, but
Excuse me, Melissa and Paul, can I just add to what Melinda
Oh,
had
sure,
mentioned
sure.
just real quickly? So, Melinda, again, is part of our Small Business Development Center network within Massachusetts, and we have different centers throughout the state. I just also want to, let folks know about our remaining resource partners as well. So we have our SCORE chapters. They are retired, Service Corps retired volunteer executives who can also support folks. Our Women for Center and Enterprise and our Veterans Business Outreach Center. So again, as Melinda was saying, we have a slew of resources across the state, at your disposal to help you out in a variety of ways. So I just wanted to make sure, folks were aware of that. Thank you.
And I guess I'd be remiss in not also mentioning that Melissa and I actually have been helpful in forming a new organization. I think you know about it, Peter, called Small Business Strong, which was an effort of the business community. It's actually housed within the Greater Boston Chamber of Commerce. It's a 501c3. Specifically to help small businesses and do really, Melinda, what you've been talking about, which is a holistic approach to help small businesses in this very necessary time. This organization is focused on largely businesses with about 250 or 1,000 or less in revenue. But I want people to know that that is out there, and as I say, our firm has helped form that and proud to be part of it. So I think, do we have time for just one real quick question, and then I'll let Melissa wrap this up. So here's a question. How does my business prove payroll costs when we don't have a payroll? There are only 2 employees in my business and we just take draws. So how do we show salaries other than cutting ourselves a check? Maybe a quick answer, then we can do a wrap up.
So, I'll take another stab at it. So in the loan forgiveness instructions, okay, for both the 3508 standard form and 3508 EZ, it does speak to documents that need to be submitted with a, with a loan forgiveness application. It talks about documents that need to be retained in your file. So this would be a document that needs to be submitted. So any form, the checks that you cut out to yourself, bank statements that prove that money went from your business account to your personal account. You don't have a payroll processor, obviously, it's going to make the job a little more difficult as far as calculating what the unemployment insurance tax would be and the premium for FICA taxes and all that. But nevertheless, however it is that you do it, as long as you can document it, you show that the paper trail, provide that to the lender, they'll make a judgment call on it, and I think it should be fine.
Can I just add to that one, Paul? Tell them to cut a check. Just so that they've got something that they can trace.
Thank you. Melissa?
Yeah. Great advice. Well, I just want to, in conclusion, I want to thank all of you for spending the time with us. As I said, this has been a true community effort. Thank you, Peter and Eli at the SBA. For being with us and all you're doing on behalf of the business community. Thank you, Melinda, for all of your practical insights, just like the one you gave. And I would be remiss if I did not thank the team at Nutter, who is integral in putting all of this together behind the scenes. Jay Wager, Stephanie Goldstein, Colleen Bidgood, Alex Kelly, Heather Merton, and Kyle Day. And a special thank you to Eva Skalkos in our business development team, who was instrumental in putting this program together. So thank you all for joining us, and we hope that you found this informative and it will help you navigate the PPP as you move forward.
Great. Have a good day, everybody.
Thanks,
Take
everyone.
care, folks. Thanks
Bye.
again.
Everyone.